there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi. Snehi, what a good start to the week. We have built on to the gains what we got on Friday. And now, second straight day of strong recovery coming in. In fact, counting yesterday, Fridays as well as today's, we've added nearly 16 lakh crore of market cap for the BSE listed firms. We opened with a huge gap up on Nifty, Bank Nifty. Trend has completely changed now. VIX has cooled off. Bank Nifty closed with 2% of gains. Higher calls being bought. So many positives to talk about. Now calls like 24,400 are being bought. Top sector, all indices closed in green today, and deep green color coming in from PSU Bank, PSE space, reality space. In fact, PSU Bank was a top sectoral gainer which was over 4% up today. PSE stocks like BEL, ONGC, HPCL, BPCL, the oil and gas pack, which were hammered the most, was the first to recover also. REC, HAL, and not just the core sectors, in fact, their value chain also. If you talk about auto, not just auto, it was auto ancillary which was also buzzing. Majorly the manufacturing and the theme-based spaces were also moving very strongly today. Power ancillary stocks like transformer and rectifiers, Voltan, KE's International, all stocks were buzzing in today, and not just the large cap, it was the broader market of the kind of gains we've seen in stocks like Torrent Power, Prestige, Cummins. Of course, all sectors were buzzing in trade today.
Absolutely, and when you talk about the broader markets, it's been the small cap space that's really, taken the buck ahead in the entire market space today. It's been outperforming the market because you have more than 2% gain coming in just on that small cap index alone. But just to mark some other news flow today, you had IGL. Indraprastha Gas, that was in focus today in the back of the price hike that they've gone ahead and done. Remember, these city gas distribution companies did see a gas allocation cut rather coming in from the APMC a couple of weeks ago, and this is just in retaliation to that. So a price hike coming in on IGL, that stock was in focus today. Another high flyer today was M&M on the back of two brokerage notes coming in. Jefferies prefers M&M compared to Maruti Suzuki, and also you have an HSBC note on the entire tractor space that prefers Jefferies to escorts that prefers Mahindra, to escorts Kubota as well. So two positive notes coming in. That stock was higher by about 4% at the start of the day, but has simmered down slightly, but nonetheless has ended the day with a 1% gain coming in. You have escorts Kubota that's done pretty well, 3% hike coming in, but that's also on the back of the news flow that their NBFC arm is going to begin operations tomorrow. So that's something that's worked out for escorts Kubota today. You also had, lastly, how can we not talk about Zomato in today's trade, because that stock was another high flyer today. Good gains coming in on that stock on the back of two triggers. It's replacing JSW Steel in the BSE Sensex index, and also the 8,500 rupees QIP fundraise that the board has given its approval to. So two very solid reasons coming in. Almost 3.5% higher is where Zomato ended the day. A slight cut coming in on that chart because that stock was trading with gains of more than 5% at one point in the trading day, but nonetheless 3.5% gain coming in, so not much to complain about today's trade. But on that note, let's make sense of the kind of moves we've seen in the market, and are they sustainable going ahead as well? And to answer this question, let's bring on board Rajesh Bhosle, the technical analyst at Angel One. Rajesh, thanks so much for joining us on the show. Now, of course, Friday was a good day for us. You have the election results that have come in line with what the street was expecting, and this number has also been quite crazy in favor of the Mahayuti. So that's something that's worked out for the street as well today. So good move Friday, good move today. But now that this trigger-based rally, if you could call it that, do you think that this move that we saw today was a one-off on the back of these election numbers, and from tomorrow we are back to the correction period that we've been seeing, or do you think this positive momentum is here to stay now?
Good afternoon, and thank you for having me on your show. So definitely a strong bounce from Friday's low, so around 1,000 points of bounce we have seen. And the best thing about today's session was the bullish gap that is left on the weekly chart. So as long this bullish gap sustains 24,000, keep a positive bias. If we see, we did see some tentativeness around 24,400, but overall, if we see sectors like IT, bank, PSU space, definitely the broader markets have turned positive. So maintain a positive bias. Any dips would be considered as a buying opportunity. Expect Nifty to retest 24,400, 24,500 again in tomorrow's session. So yes, definitely positive bias.
market, you would still be a buyer on these level also. 24,400 happens to be the first resistance, and then 24,500. We've seen an active call buying on 24,400 though. Let's see how the markets fare out tomorrow. But then going into tomorrow, what trades would you recommend, Rajesh? Two specific trades?
So if you see, we just spoke that auto index were in burst today. Some good coverage on the auto space. From the auto space, the stock that did well today was Ashok Leyland. So Ashok Leyland, if you see on the daily chart, we are seeing a inverse head and shoulder pattern breakout. On the futures front, we saw some fresh long formation as well as out of the money call saw some unwinding. So Ashok Leyland looks positive. The stock has also crossed above 89 EMA, which was previously acting as a resistance. So expect a strong move in the Ashok Leyland. One can buy Ashok Leyland with a stop loss of 226. The target that can be expected can be 255. My second buy is on the IT front. So if we see the IT index, it is trading at all-time highs, and in the recent market correction, IT has done well. Today, some lethargic move was visible in the IT space, but Wipro did well and it has crossed its previous long-term resistance. So Wipro looks poised for a strong positive momentum. So Wipro can be bought with a stop loss of 571 and the expected target would be around 604.
Leyland and Wipro, two positive calls coming in from Rajesh. Rajesh, thanks so much for sharing your picks and your views. On that note, we'll let you go. But now time for the word from the wise segment. And today we don't have one expert, we have a slew of experts, because in a very special programming, we caught up with the top fund managers at one of the biggest fund houses in the country, and HDFC AMC is the ET Now AMC of the month. And the biggest highlight from our conversations with them is that the India story is alive and kicking. Listen in to the likes of Navneet Munod, Chirag Setalwad, as well as Roshi Jain on what they had to tell us and what the long-term outlook is when it comes to the India growth story.
But the government's big focus on manufacturing, on infrastructure, that is another very, very big theme, right? I mean, in last few months, people have kind of course, because the valuations went up, and then maybe some of those stocks have corrected with the with some bit of disappointment on the earnings side. But I think post this election, we are all expecting in next few months a big order flow from the government, which will revive, which will kickstart again the public capex, which will give confidence. I mean, you need to inject cash and the confidence in the system, which I'm pretty sure government is doing it. And we will see the private capex also kicking in. So there are many, I mean, India always says a stock picker's paradise. India is a stock picker's paradise.
Domestic pharma is growing 7-8% without volume growth. So if volume growth comes back, then that's a little bit on top. Hospitals are growing reasonably well, occupancies are high, and US generic price declines are easing. So what used to be 7-8-10% is now coming to 2-3-4%. So overall, the environment is reasonably positive, and that creates the opportunity for more ideas. But you have to drill down to a company-specific level, and when we do that, we find a lot of well-run companies, and hence we are overweight on pharma, but it's stock-specific.
A pickup in mass consumption and huge under-penetration in the automotive sector itself in India, I think that you should look at some of our holdings. In addition, I think that we also have a very strong auto components industry, and which is globally competitive as well. And you will also find holdings in our portfolio in the auto component space, which is not just beneficiary of Indian demand picking up, but generally competitiveness in the global space, where we are seeing some softness in demand, but I think perhaps just cost competitiveness will also make market share gains.
We would expect RBI to consider rate cuts sometime in 25, maybe Feb or maybe even April, but the view is that interest rate cuts have been delayed but not denied. I think over the course of 25 we will see a shallow rate cutting cycle. 25 to 50 basis points is on the cards, and given the positive demand supply scenario for Indian government bonds, we would expect yields to head lower over the medium term.
All right, so fund managers at HDFC AMC believe that it's a stock picker market, but then government spending could improve going ahead. We stay for a short break here. When we come back, we get you more of the buzzing stocks of the day.
Hi there, welcome back to Your Trades. Thanks so much for staying tuned to ET Now. Now, before we go ahead, get stock specific, let's talk about the trends that we've seen when it comes to the index futures. And for the November expiry, some long build-up being seen on Nifty, so that's quite positive. And Nifty Bank as well, some short covering seen on this front. So yet another positive cue coming in for the Nifty Bank as well. If you take a look at what the volatility looked like in the market today, that's measured by India Wix. So that came at 15.3, which is lower by roughly 5%. So that's another positive trigger to today's rally. And if you take a look at the active calls and puts, and let's talk about those levels where they were spotted today for the 28th November expiry. Some call buying was seen at 23,300 and 23,400. So that's the resistance level that the market is currently trying to test. And like Rajesh also told us previously, that 24,000 and building on to 25,000 could see some good action. At least those are the levels to watch out for on the upside. But if you take a look at the active puts for the 28th November expiry, put writing taking place at 23,200 and 23,100, making 23,100 the next support level to watch out for. It's rather interesting because last week we didn't have a clear support level in sight on a falling market. Today, Priyanka, we don't seem to have a resistance level in sight. So it seems
More
like
room.
there's more
There's
room
more
to
room.
grow,
Yeah.
and the balances are tilting towards the side of the gains. At
Yeah,
least.
absolutely. When you have a put writing, strong put writing coming in, at least you've got a cushion, you've got
Absolutely,
a support. Now
yes.
you've got a up move. Of course, there's more room for up move from here on. But then let's track you. Let's get you the big story of the day, and that happens to be Zomato. Sharad is joining us with more details on that. This one was completely on tear today. Two factors. One, inclusion in the Sensex, and second one was the shareholders' nod for their 8,500 crore QIP. Let's go across to Sharad for more details on both.
Well, yes, Zomato is in focus and the company is expected to enter Sensex from December 23, and it will be actually replacing JSW Steel as well. Also, the stock would be entering the F&O segment from 29th November. And interestingly, shareholders also approved almost 8,500 crore fundraise via QIP as well. Also, it's expected that once it's there in F&O, it will be eligible for getting inside Nifty index as well, and it's a strong candidate to be included in this index when the rejig is announced in March next year. Now let's look at the journey, how it has actually come out for the company. From the IPO price itself, the stock has jumped 3.7 times, while from its lows, which was there in 2022, it has jumped almost 7 times. Interestingly, on 1 year basis also, the stock has jumped almost 150%. So what are the key triggers for the company? And of course, importantly, recently they have taken hikes in their delivery fees, platform fees, convenience fees as well. But quick commerce is something which the entire market is looking at. That is the company Blinkit. But there is more competition coming in this space, and their market share currently stands at 56%. Now also the fundraise expansion that's expected to kick in for the business as well as the quick commerce, and also the increase in the dark stores is something which the management had spoken about. Now let's look at how the brokerages have actually given their views. The highest target prices which we have taken, the first 4 foreign brokerages over here, CLSA and Morgan Stanley have given target price ranging between 355 to 370 rupees, while for JP Morgan and Jefferies it stands between 335 to 340 rupees, which most of the ratings going on an overweight or a buy rating.
Okay, so Zomato was a stock in focus today, up almost 3.5%. But remember earlier on the show, we also spoke about Mahindra and Mahindra. Now, M&M makes for a better investment case than Maruti Suzuki, is what Jefferies believes, as the brokerage note that has the company says that the company has gained market share across segments and enjoys stronger industry tailwinds. My colleague Varun is here to sum up what the note says and also bring out some of the highlights of that note. Varun.
Well, so Jefferies has come out with a note on auto sector, and they prefer M&M more than Maruti. On M&M, they have a buy call with a price target of 3,700, and on Maruti, they have a hold call with a price target of 10,900. Now, they believe that M&M is better investment case than Maruti, and it enjoys better and stronger demand tailwinds. Also, on M&M, they say that the company is continuously gaining market share in SUVs, tractors and LCVs, while Maruti is actually losing market share in passenger vehicles. Also, M&M has demonstrated better margin sustainability. So this is one more plus point for M&M. They expect M&M to deliver a 19% EPS CAGR from FY24 to FY27, which is higher than the 10% that they estimate for Maruti. On valuation front, they say that both M&M and Maruti almost trade at par valuations, but yes, M&M has better growth prospects and better margin prospects than Maruti, and hence they prefer M&M more than Maruti. Other than M&M, TVS and Eicher Motors, these are also some of the stocks which are in the top buy list of Jefferies.
All right, thank you so much, Varun, for taking us through the details on the report on auto as well as especially on M&M and Maruti. Thanks very much. But moving on, PSUs are on a tear after the resounding victory for BJP and its allies, as investors see this as positive move for policy continuity and of course expect the infra push to sustain. So will this run sustain? Are PSUs ripe for a renewed rally? Jinay joins in to take us through the list of beaten down PSU stocks. Jinay?
Well, definitely. If you look at the PSC index, considering today's move, it's about 2 to 3%. And if you consider the Friday's move, then it's about 5 to 6% rallying in today's session. Also, if you look at the recovery, it's largely led by a couple of themes. Firstly, we'll talk about the railway stocks leading back by Railtel, Titagar Wagons and Rights Limited. Also, the defense and shipping stocks which is leading the overall PSU index. If you look at the stocks, then it is Hindustan Aeronautics, Bharat Dynamics and Garden Ridge Shipbuilders is what is leading the overall shipping and defense pack. The third segment would be PSU banks who are leading. We are seeing a strong performance by Central Bank, SBI and Canara Bank in focus. Also, oil and gas pack is also leading this rally, where we are seeing a strong performance by ONGC, BPCL, HPCL and GAIL. Now, apart from this, there are also several other counters where we are seeing a strong up move like NHPC, BHEL, REC, Hindustan Copper, General Insurance Companies, among others. Now, if you look at the index before rally or at the last week's closing, then we are seeing that the PSU index was overall down about 17% from its 52 weeks high, and with multiple stocks, the constituents of the stocks were down as much as 45 to 48% from their respective 52 weeks high. If you look at some of the stocks, then Bharat Dynamics was down about 48%, Ircon International down about 47%, stocks such as MMTC, Mishra Dhatu, Nigam and Hudco were also down in excess of 40%. So after a strong fall over past 3 months in the PSU index, we are seeing a strong recovery from past 2 sessions in the overall PSU index.
Okay, Jinay, thanks so much for taking us through that list of PSU stocks that have been ailing away in the previous trading sessions. But let's also talk about another stock that was in focus today. More than 3% hike coming in on this stock, and that's IGL, because now following Mahanagar Gas, which is MGL, hiking prices just last week, Indraprastha Gas has too gone ahead and hiked prices by 1.5 to 4 rupees per kg in select areas other than Delhi. Now, Delhi, which accounts for a significant 70% of the company's total CNG consumption, remains unaffected by the price hike for now. My colleague Somit is standing by to make sense of this pricing, to put it into perspective. And Somit, tell us what's the rationale behind leaving Delhi out of the entire price hike, and how is this going to affect the company going ahead as well?
Well, Indraprastha Gas has followed what Mahanagar Gas has done and has taken a price hike in the range of around 1.5 to 4 rupees per kg for CNG. However, this price hike has been taken in the non-Delhi areas, and these areas contribute just 30% of the total volume of IGL, while Delhi alone contributes nearly 70% of the total volume, and no price hike has yet been taken in that region. So this means that though the price hike is in the range of around 1.5 to 4 rupees per kg, the effective price hike would be just around 0.5 to 1.2 rupees per kg, as against the requirement of an at least 9 rupees per kg hike to offset the couple of cuts that we have seen in the APM gas allocation. As per analysts, this price increase could support margins in the range of around 0.1 to 0.5 per SCM, as against 5.5 which was required post the cut in the APM gas allocation, and versus if you look at the margins that they have earned in the first half stands at around 6.9. So a very small increase in the margin that we would see see or a very small support in the margin that we would see because of this price hike. Now do remember on November 22nd, MGL had also increased the price, had also taken a price of around 2 rupees per kg as against a requirement of 9 rupees per kg, and that 2 rupees hike in the CNG prices would support margins by around 0.8 rupees per SCM as against the requirement of around 5.5 rupees post the APM gas allocation cut. Now in the first half of this financial year, MGL had earned a margin of around 11.3 rupees. So
very much, Somit. Now, quickly, let's take you to Jinay, who's standing by with a list of stocks that were buzzing in trade today. Jinay?
Cochin Shipyard will be in focus. This company has signed an MOU with SLET USA. Now, this is for in design and critical equipment for jackup rigs for the India market. Thirdly, Aurobindo Pharma was also in focus as company's US arm has entered into a collaboration and license agreement with a global pharma major for a specific product development. Fourth stock that was in focus was Central Bank of India. Now we saw a move upcoming of over 7% in this particular stock as RBI has actually approved the company to foray into its insurance business. The company will be partnering up with Italian-based Generali Group for the same. Lastly, RITES was also in focus as company won an electrification order for the railway worth around 532 crores. And lastly, UPL was in focus as the company partnered with CH Global for feed stock supplement development.
Stocks were in focus today. Jinay, thanks for highlighting that entire list for us. But on that note, I'm afraid we're completely timed out on this edition of Your Trades. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.